Welcome to the August Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, the report on the economy's growth was released last month. How are we doing?
Well, it was a very interesting report. The good news is that, in fact, growth for the second quarter came in much higher than expected, at 1.7% rather than 1%. The bad news is the first quarter was revised down. So at the end of the day, at the end of the first half of the year, we're pretty much where we would have been otherwise. But the positive takeaway from this is that growth has actually accelerated. We've seen growth go from essentially zero at the end of last year, up a bit, and then up a bit more. So even though it's still at fairly modest levels, the trend is positive. The other takeaway from this is that this modest growth, this accelerating modest growth, has come at a time when there have been significant headwinds to the economy as a whole. Taxes went up for everybody at the start of the year. The federal sequester cut back demand significantly. So this is like someone running a 100-yard dash carrying a 50-pound sack of flour. It's not that he's doing really well, it's that he's doing well at all that matters. And I think that's the takeaway from this report.
After reaching historic lows, interest rates are back on the rise. How do you expect that to impact the recovery in the housing market?
If you look at where interest rates are and where housing affordability is, actually housing remains very affordable. And if you look at average incomes compared to rents, we can see very much higher interest rates than we have right now and still have a real economic justification for people to buy. Is it going to slow things down? Yes. In fact, we're already seeing that. Is that a bad thing? I don't think so. In fact, I think that's actually a good thing. We've seen growth rates in housing prices that frankly are unsustainable. So to have that moderate a little bit, I think is very positive for the sustainability of the housing market. So on the whole, are we going to see growth? Yes. Is it going to be a little bit slower? Yes. Is that a bad thing? No, actually that's probably a good thing.
July was a strong month for the markets. Why was that? And do you expect it to continue?
When you look at the equity markets, a couple of things drive them. One is sentiment, and I think that's actually the primary driver in July. When the Fed said in June, just kidding, about reducing the tapering, it brought a lot of investors back into the market. And I think a lot of the rally we've seen in July is a reaction, a relief rally that the Fed will continue to support. Because what we're seeing on earnings, we are indeed seeing companies beating their expectations on earnings. But the thing to remember there is the expectations have been massaged down very, very much. Yes, we're beating expectations, but those expectations are a lot lower than they were at the start of the quarter. So you're seeing the market essentially saying, yes, we're going to recover, but it's going to be on Fed support. It's not going to be based on, in my opinion, the fundamentals.
What do you see as the risks going forward?
I think the fact that the Fed may well taper in September, I don't think they're going to for political reasons, but economically there's a justification. We saw a reaction when the Fed talked about it. When the Fed actually starts to do it, I think a reaction is very possible. We've seen improvements in European attitudes, but the fundamentals in Europe are still concerning, and there are some events coming up that really could create a geopolitical shock. That, and I think China is certainly a risk going forward. But I think the biggest risk right now is the debt ceiling debate. That's going to be coming up in the next couple of months. And if you remember how ugly it was last time, that's certainly something I'm concerned about.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.